he just lost about $1 billion.
Sonny, there's only one word to describe what's happening, and that is panic.
The Dow Jones Industrial Average suffering an unbelievable, incredible day on Wall Street. That the largest point and percentage drop since 1914.
From the opening bell, the market was in free fall. After last Friday's record 108-point loss, analysts had expected a rally. Instead,
it's a panic. Everyone's in panic.
Today is Black Monday, the day the Dow dropped more than 500 points. The day the Dow dropped more than 22%, almost double the rate of the Black Monday that signaled the beginning of the crash of 1929. But this crash of 1987 is not just an American experience. Around the world, stock markets fell faster than a skydiver without a parachute. The panic starting in Tokyo this morning while the West slept.
By October 1987, the markets were already on edge. Rising interest rates, a weakening dollar, and a massive trade deficit created a ticking time bomb. But no one expected what happened next. At the opening bell, the floor was hit by a tidal wave of sell orders that simply wouldn't stop.
Everybody, we're trying to find a bottom. We're trying to, as a floor broker, I see stocks trading 10 points below where they traded Thursday, and I'm saying this has to be the bottom. And then they trade 5 points lower than that.
The fact is, nobody ever saw a market like today. It's unprecedented.
The first time in history, computers took control. Early versions of automated trading, called program trading, were designed to sell stocks as prices dropped. This created a lethal feedback loop. As prices fell, the machines sold. As they sold, prices crashed further. It was a digital avalanche that humans couldn't switch off. Over $500 billion in wealth vanished into thin air. It remains the largest one-day percentage drop in Wall Street history. This crash forced the world to realize a terrifying new reality. In the age of global high-speed finance, an entire economy can collapse before you even have time to pick up the phone. London, a city caught in the crossfire of a technological revolution. Its newly automated financial system, the Big Bang, was put to the ultimate test. On Black Monday and the following Tuesday, the FTSE 100 index plummeted by nearly 26%. It remains one of the most volatile periods in British financial history, as billions of pounds were wiped off the value of UK companies in 48 hours.
More than 183, the biggest one-day drop in Britain's history. And from there to Wall Street, where the numbers speak for themselves. Unofficially, the Dow stands at 1738.41, a drop of more than 508 points.
The sheer volume of sell orders paralyzed the system.
Proof,
the communication lines between New York and Chicago were overwhelmed. For hours, traders had no idea where the real price was. It was like trying to land a plane in a thick fog with no instruments. By midday, the market wasn't just falling, it was disintegrating.
What did I do for you, Joey? What did I do with you? Hey, what did I do with you?
At that moment, the numbers on the screen became worthless. Fear overrode analysis, and the greed of the past weeks was paid for in minutes. It wasn't just a market crash, it was a total psychological breakdown. For years, investors believed the market only went up. On that Monday, that illusion shattered. People weren't just selling stocks, they were selling their futures, their pensions, and their sanity.
All right, well, the crash of 87 was interesting, really interesting, because it was a crash without consequence, or without big consequence. A crash that essentially could be ignored in the end. And when you go back and you read the literature of the time, a lot of really smart people were saying, now we have the Depression. John Kenneth Galbraith was saying that this is the crash of 29 all over again. And now comes the Depression. It was just sort of assumed that if there's a crash, then there's a depression.
Before the crash, there was a sense of unstoppable euphoria. People believed the markets would rise forever. But on Black Monday, that confidence was replaced by a paralyzing shock. It wasn't just a financial loss. It was a total collapse of belief in the system. The psychological horror for traders in London was the complete helplessness. As the new computer systems froze and phone lines went dead, a silent panic took over. They watched their wealth evaporate on red screens, unable to execute a single trade. It felt like watching a plane crash while being strapped to the seat.
Even normally optimistic analyst Larry Wachtel doesn't see a quick recovery.
What usually happens in cases like these where the psychology has been so scarred is that once there is a technical rally back in which people unload on the rally, then you go through a long quiet period. The people that got out don't want to get in. The people that wanted to get in aren't sure about whether they want to get in now. And so you go through a long quiet convalescence period.
It was the wildest day in history.
Jimmy! Right? Jimmy! What did I do for you, Joey? What did I do with you? Hey, what did I do with you?
It's on OPAC.
No.
I got you.
Thank you, Paul.
Yeah.
We looked back and did a statistical analysis on the 1920s through today, punching in literally thousands of Dow high, low, and closes to run correlations between what happened in 1925 to 1928 to what happened between 1982 and where we were in 1986. Well, that correlation turned out to be over 90%.